because
Morning, sir.
because when we are interacting with each other, we bound to learn something from each other. And any person is having any problem at any point of time, he can raise. Don't wait till last, because at that time it can be solved easily. Instead of putting all the questions at the end, then it will be difficult. So I'll try to share my power screen if I can, because I'm not very good in computer savvy. So I'll try if I can do. It is asking me to re-log in. I'll do it within 2 minutes.
Okay. So I understand you opened another window of Zoom. So your voice is also muted. Yes.
I hope I will do without sharing. There is no issue because I'm not able to share it. I have tried my level best. Anyway, we'll start with introduction to MSME. First, we should know what is MSME and how it is defined under the Act. MSMED Act, as you all are aware of it, it was uh, promulgated in 2006, known as the MSMED Act 2006. And its definition is shown under Section 7. Section 7, subsection 1 provides that the central government may, by notification, classify any class or classes of enterprises, whether a proprietorship, HUF, partnership firm, cooperative society, company, or undertaking, engaged in manufacturing, production of goods, or rendering services into it. Initially, the trading was not incorporated it. It was incorporated in 2020. Uh, Now it is defined under three categories: micro enterprises, small enterprises, medium enterprises. Section 7, subsection 9 empower the central government to vary from time to time the criteria of investment and also to consider criteria or standard in respect of employment or turnover of the enterprises. So the Act does not fix the specific numerical thresholds in Section 7. Rather, it gives the power to the government to notify threshold via subsequent notification. First notification was issued when the Act was introduced. After that, the second notification was issued on 1st April 2023, and third and final notification was issued on 1st April 2025. So accordingly, the limits for micro, small and medium enterprises has been changed. Revised classification was given in 2020. Prior to 1st July 2020, old definition was under the earlier regime pre-2020, manufacturing and services had different ceilings based solely on investment in plant and machinery and equipment. For example, micro enterprises manufacturing investment less than or equal to 25 lakh, service equipment less than or equal to rupees 10 lakh. From 1st July 2020, 31st to 31st March 2025, before the second uh, notification comes. That was on 26 June 2020. A composite criteria of investment plus annual turnover was introduced. Before that, the criteria was only one, that is investment in plant and machinery. In 2020 only, it was introduced as annual turnover also. The classification was micro enterprises, investment in plant and machinery or equipment more than or equal to 1 crore, or turnover is less than or equal to 5 crore, comes under micro enterprises. And small enterprises comes less than or equal to 10 crore, and turnover is less than or equal to 50 crore, and medium enterprises investment comes less than or equal to 50 crore, and turnover is less than or equal to 250 crore. So from 1 crore to 250 crore, these were up to 31st March 2025. From 1st April 2025 onward, the new notification was issued on 21st March 2025. The notification number is 1364E. The threshold have been revised upwards. Investment by 2.5 times and turnover by twice. The announced in budget 2025 and notified effect from 1st April 2025. The new classification is micro investment in plant and machinery or equipment is less than or equal to 2.5 crore, and turnover is less than or equal to 10 crore. Small enterprises investment less than or equal to 25 crore, and turnover is less than or equal to 100 crore. Medium investment is less than or equal to 125 crore, and turnover is less than or equal to 500 crore. Key legal takeaways from section 7 definition. The definition of what constitute a micro, small and medium enterprises is not frozen in the act, but left to the government to notify under section 7 subsection 1 and subsection 9, because all these notifications are issued accordingly. The Act allows the future variation as seen in 2020 and 2025 notifications. So this is all up to the status of the micro, small and medium enterprises. If an enterprise falls within the prescribed threshold, investment and turnover both, for a given category as per the relevant notification, it qualifies as the category of MSME. Enterprises need to look at which notification is in force as on the date of classification, since the threshold changes. So when we go for a registration, we have to see when the registration was done. If the registration was done later on, then the status of the industry will change. So you have to go for the modification of the status through Udyam portal is given. The composite criteria investment plus turnover is a standard post 2020, merely meeting investment criteria is no longer sufficient in many cases. So it requires both the condition has to be fulfilled. As we are all aware of that on 15th August 2025, Honorable Prime Minister Narendra Modi uh, announced from the ramparts of the Red Fort that they are going to give more benefits to the small industries. Accordingly, one committee was constituted under the chairmanship of Mr. Rajiv Gaba. The committee's name is Gaba Committee Report, and he is the member of the Niti Ayog. So he has submitted uh, 38 time-bound reforms and under four key areas, which was submitted on 20th October 2025. The contribution of MSME is 35% to the total manufacturing output and 46% to exports, and 30 crore people are employed under it. 30% of the gross value addition. The problem faced by MSME to follow 1400 plus compliances process throughout the year and 40 regulatory changes per day. The recommendations are as under. So from taking out from clutches of these regulations and uh, compliances, some changes were suggested. They were around 38, but mainly I am covering those are very important. Uh, Even the timeline is fixed. By 31st October 2025, the following changes has to be implemented. Number one, reduction in tax rate from 18% to 12% for delayed payment of taxes for a short-staffed micro enterprises, because income tax is always taking 18% interest if you don't pay the tax in time. Now for MSME, it is reduced to 12% from 31st October. Harsh penalties for minor errors may be reduced from rupees 25,000 to rupees 5,000 only. Boosting commerce export, suggested DPIIT clarifying and easing 100% FDI rules for commerce export to not be treated as a part of inventory based on prohibited category. So these were the recommendation which has to be implemented by 31st October. So some of the recommendations were given to be implemented from 30th November 2025. All, all enterprises with turnover of rupees 100 crore, presently 40 crore, that limit is, paid up capital is 10 crore, presently it is 4 crore, may be included under MSME definition. It means it is for medium and micro and small enterprises. CGTMSC may also be given coverage to medium enterprises by increasing maximum guarantee from rupees 10 crore to 15 crore per borrower. So this can be covered up to micro and part of small industries, because presently this CGTMSC guarantee is given only up to 10 crore. And from 31st December 2025, they have given some other recommendation has to be implemented. MSME to be exempted from mandatory CSR by amending section 135 of the Companies Act, where we have to spend around 2% of the average profit of the last 3 years. It is now not necessary for MSME from 31st December 2025. Reduce board meeting requirement for small companies from 2 to 1 only. Instead of directors filing, only event-based filing is required. No mandatory auditor with turnover less than 1 crore for small enterprises, which attracts amendment in law. that will come in the next parliamentary session in winter session of the parliament. GST return filing for micro enterprises where annual turnover is up to 10 crore. It may be from quarterly to annual filing. And small where turnover is up to 100 crore, it may be quarterly instead of monthly. This is the status of the GST filing where they are giving this relief that those are having turnover less than 10 crore, they have to file on the annual basis, and those are having less than 100 crore, they have to file it on quarterly basis instead of monthly. Amendment in laws suggested by appointment of sole mediator, sole arbitrator for faster resolution of dispute. As you are all aware of that, arbitration has to be concluded within 90 days from the date of empanelment of the arbitrator. So this is not following in the letter and spirit. So accordingly, this change will come from 31st December 2025. Launch online education adjudication process, expand MSME facilitation council, mandate pre-deposit enforcement through actual deposit, and 50% release of payment are held up. So here during the adjudication, if a party, if, the buyer has to pay uh, to the tune of deposit of requirement to the deposit of rupees 50% to the 50% of the amount. But if the opposite party succeed, then 50% will be released and balance will be returned back to the buyer. So he can go for an appeal, because in appeal he has to make the good up to 75% of the total amount. Then only his appeal will be accepted by a civil court. By 31st 2026, there are another amendments are suggested. Those are very core. The GST exemption limit for those dealing in goods may be increased from 40 lakh to 1 crore, and for others 20 lakh to 50 lakh. 20 lakh to 50 lakh for the service sectors, and 40 lakh to 1 crore from the those are selling the goods. Increase threshold for tax audit from 1 crore to rupees 2 crores for micro enterprises with 5% of cash receipt. This is regarding tax audit. For that amendment in the parliament has to come. That's why they've fixed the limit on 31st March 2026. Till now, if there is any question, I can take. Or shall I continue on the next? Role in India's GDP, employment and export. Contribution to GDP's gross domestic product, quantitative contribution. MSMEs contribute approximately 30% of India's GDP. Within this, manufacturing of MSME is 6.1% of the manufacturing GDP. Service sector in MSME contributes around 24% to the GDP. The MSME sector acts as a shock absorber during economic downturn by sustaining local production and employment. Comparative insight. Now we can see that what is the status in other countries where we stand. India's contribution in MSME the 30%, and employment constitute around 40%, while in China the production is around 60% under MSME and 80% contribution towards employment. European Union 55% in the production and 67% in the employment contribution. So we are lagging behind in it, and we have to make up. That's why these amendments are suggested from different date, from 31st October to 31st March 2026. Interpretation: India's MSME are underperforming in GDP contribution relative to global peers, indicating a global gap in productivity and scale up support. Legal and policy nexus. MSME Development Act 2006 recognized MSME as vital for national development in its preamble. RBI priority sector lending PSL norms marks 40% of the bank credit of such sectors. There are so many sectors where Reserve Bank of India fix they have to distribute 40% to the priority sector, and under that priority sector MSME is getting 40%. It means 16% of the total advance is going to the uh, MSME sector. MSME also contribute significantly to Make in India, Atmanirbhar Bharat and Startup India initiatives. Economic role: promote balanced regional development. MSMEs flourish in semi-urban and rural areas, encourage capital formation and entrepreneurial innovation, lower investment threshold, act as ancillary units, feeding large industry supply chains just like auto, textile, electronics, contribute to employment generation. Scale of employment: MSME collectively employed around 30 crore persons. Micro enterprises alone account for 97% of the employment in the sector. 97% of 30 crore. Urban share is 49% of rural share. 51% indicated a balanced uh, employment distribution. MSME gives employment in urban sector around 49%, while in rural areas it is giving 51%. So the MSME is doing very well in the rural areas. So result of that, the migration of the people may decrease in future if the progress is like this. Nature of employment: provides self-employment and wage employment in the manufacturing, trade and services. Absorbs semi-skilled and unskilled labor migrating from agriculture. Generate women employment in small scale and home-based enterprises like handicraft, coir, food processing, etc. Employment elasticity: MSMEs exhibit higher employment elasticity compared to large industry. That is, for every rupees 1 crore of investment, MSME create more jobs. They act as social stabilizer by reducing rural urban migration pressure. As I told you, since 51% contribution is from the rural area. Legal policy connection. Section 11 of the MSMED Act mandates policies for skill development and technology upgradation. Prime Minister Employment Generation Program PMEGP under KVIC support self-employment creation. Skill India Mission integrates MSME skilling program via tool rooms and technology centers through ITIs. Contribution to exports. Share in national export. MSME contributes about 46% of India's export. Major export-oriented MSME sector like textile apparels, leather and footwears, engineering goods and auto components, pharmaceutical, gems and jewelries. IT-enabled services also. Global integration. MSME integrates global value chains by acting as suppliers to multinational corporations. They contribute to India's service export through software, BPO, and consultancy. Scheme like Z certification, that is zero defect, zero effect policy. Enhance MSMEs export competitiveness, export promotion mechanism, export promotion council, EPCs for MSME sector, MSME export facilitation portal. That portal's address I can give you: msmeexport.gov.in. Interest equalization scheme, RBI circular number dated 2023, 3 to 5% interest subvention on pre and post shipment credit. This is for the exporters. Trade infrastructure for export schemes, TIES, to improve logistic for MSME exporters. Legal policies and references. Foreign Trade Policy FTP 2023-28 recognize MSME as export champions. Section 9 of MSMED Act empowers the government to frame programs for enhancing export competitiveness. Integrated analysis, GDP, employment and export. GDP is 30% is the contribution, and strategic role is in economic viability and value addition. Key policy instrument under MSME Act and Atmanirbhar Bharat. Parameters under it: employment is for 30 crore people, inclusive growth and livelihood, and the important key instruments are PMEGP, Skill India, and MSMED. And export is around 46% of the total export. That is global competitiveness. Interest equalization scheme is applicable on that. Challenges and opportunities. Despite their contribution, MSME face lower productivity and informal operations, credit and technology gaps, weak integration, and global supply chains. However, policy initiatives such as CGTMSC, Digital MSME, and PLI scheme aims to boost their growth. Contribution to inclusive and sustainable growth. Before going to that, if any question till now, I can go for it. If anybody is having any question, they can raise. You are not audible, please.
Sir, we as an IP, when we want to check the MSC, so we should look at certificate only, because the turnover criteria, investment criteria should be prevailing on the date of the establishment of that SMS.
Correct,
MSC.
correct, correct. You are absolutely right. That's correct.
And what if the promoter they are not cooperating? How can we get their certificate registration, say them or something like that data? In most of the cases, either which are coming under IBC or say in CIRP, most of the promoters are not cooperating. That is the challenge we are facing right now.
When company is registered as MSME and they are supplying goods to the other companies,
Yeah.
if the payments are not coming, then that company has to submit Schedule 3 in their balance sheet. So from there we come to know what is the status of the company. Number one. Number two, we can go to the Udyam portal also. From
Yeah.
there, if we put the name of the company, we'll come to know whether this company is registered or not. And if just like your corporate affairs, we are
Okay.
asking about ID of the directors or company's SIN number. In the same way, we can get this also. There is no problem. So I'll continue with.
Yeah, sure.
Okay, thank you.
I don't know if anybody
Uh,
else has question. You may ask any question, Ali. Anybody else may.
Anybody can ask question. I have absolutely no problem. Because when I am explaining, if you ask anything, I can reply immediately. And it will be clear to you also. Because at the end, if I'll give some reply, so you will have nothing in your hand to refer it. The only this thing is there.
Okay,
So
sir.
if anybody is having any question till now, they can raise their questions. Then only I'll go forward. So I hope there is no other question. Now I'm going ahead. Contribution to inclusive and sustainable growth. Inclusive and sustainable growth lies at the heart of the India's economic development strategy. Micro, small, and medium enterprises play a pivotal role in ensuring that growth reaches every section of society while maintaining environmental responsibility and long term viability. They serve as engines of employment, entrepreneurship, and innovation across diverse regions of the countries. Latest example is your Muradabad's uh, utensils and your Firozabad, uh, what you call bangles, because every district is giving some specification, so they are mastering in that, and the export will be easier, the cost of production is also lower, and employment generation is also there because they are doing it from the generations. Legal and policy framework. The MSME Development Act 2006 provides the statutory foundation of promotion and development of MSMEs. Section 7 defines MSME based on investment and turnover, while Section 9 empowers the government to frame programs to enhance competitiveness, capacity building, and sustainability. Supporting policies such as draft national MSME policy, priority sector lending guidelines, and ZED uh, certification scheme collectively promote sustainability through green technology, adoption, access to finance, and environmental protection. Economic inclusion and sustainability. MSMEs contribute nearly 30% of India's GDP and 46% of its export. Their geographical spread ensures balanced regional development. With a strong presence in semi-urban and rural areas, they employ over 30 crore people, generating livelihood and low and middle income groups. Financial inclusion is a core pillar of the economic sustainability. Programs like Credit Guarantee Fund, Trust and Micro Small Enterprises, that is CGTMSC, and Trade Receivable Discount System, TRADs. This is the additional benefit is given whenever you are having a receivables, means bills, you can discount from the banks. Under MSME, this facility is added up. Enhance formal credit access. The digitalization of MSME registration through the Udyam portal integrates small enterprises into the formal economy, social inclusion and empowerment. MSMEs foster social inclusiveness by empowering marginalized section women and rural entrepreneurs. Scheme like Stand Up India, Mahila Choir Yojana, and Prime Minister Employment Generation Program PMEGP enables equitable participation in the economic process. Traditional and village industries supported under the Khadi and Village Industry Commission 1956 preserve indigenous skills and promote self-reliance. Skill development through MSME, tool rooms and technology centers coupled with Skill India and national apprenticeship promotion schemes, ensures workforce readiness and supports inclusive India's growth. Environmental sustainability. Environmental sustainability. within MSMEs is advanced through the adoption of clean technology, energy efficient process, and resources conservation. The ZED, अर्थात Z effect zero defect certification scheme encourages industries to minimize waste and pollution. Similarly, the technology and quality upgradation program facilities modernization and promote eco-friendly manufacturing. The growing focus on circular economy initiative has led MSME to engage in recycling renewable energy and waste to wealth enterprises. The RBI's Sustainable Finance Guidelines 2024 and SIDBI's Green Cluster Program further promote climate resilient and environmental responsible MSME operations. Alignment with national and global goals. MSME directly contributes to the realization of India's Sustainable Development Goals, that is SDGs. It is important. Sustainable Development Goals are given under different heads. So they will give SDG number 1, SDG number 2 like this. So, for example, elimination poverty, SDG 1, achieving gender equality, SDG 5, ensuring decent work, SDG 8, building resilient infrastructure, SDG 9, promoting responsible production, SDG 12, and combating climate change, SDG 13. So, like this, there are so many, but I took only important ones. Nationally, MSMEs are integral to Atmanirbhar Bharat, Make in India, and Viksit Bharat 2047 vision. Challenges and way forward. Despite their contribution, MSMEs face challenges in adoption, sustainable practice due to limited awareness, lack of access to green finance, and technological gaps. There is a need for broader awareness campaign on environmental standards such as ZED and ISO 14001 certification. The way forward includes expanding green financing framework through SIDBI and NABARD, offering fiscal incentive for energy efficient technology, integrating sustainability in MSME cluster policies, and promoting ESG based compliance. Stronger industry academia partnership and digital transformation will further strengthen sustainable growth. Judicial and policy reforms. Judicial process such as Kalashnath versus State of UP, AIR 1957, SC 790 acknowledged the role of small industry in equitable development, while MC Mehta versus Union of India in 1987 AIR 1086 emphasized environmental responsibility. Policy instrument like Niti Aayog, India at 100 Vision 2023 identify MSME as central to inclusive and sustainable growth. Conclusion of it, MSME are vital to India's inclusive and sustainable growth model. Their contributions span economic empowerment, social and inclusion, and environmental stewardship. By aligning with the global sustainability framework and national incentives, MSME will continue to drive India's transition towards an equitable, resilient, and green economy. So, till now, if there is any question, I can take questions. Anybody can put on their audio and video, can ask the question if they are having any. So now I will start on benefits of MSME. The most important is economic benefits, that is job creation, balanced regional development. Micro, small, and medium enterprises are backbone of India's economy, contribution nearly 30% of the GDP, and generating over 300 million jobs across diverse sectors. Their decentralized and labor incentive measures ensure economic growth reaches both urban and rural areas, promoting inclusiveness and regional balance. Job creation and employment generation, large scale employment potential. MSMEs are the second largest source of employment after agriculture in India. Owing to their low capital, low to labor ratio, they absorb surplus labor from the agriculture sector, particularly in rural and semi urban regions. Skill development and entrepreneurship. MSMEs serve as training ground for entrepreneurs and workers through skill development program like MSME tool rooms and technology centers, Skill India Mission and PMEGP. They enable workforce capacity building and local entrepreneurship. Empowerment of vulnerable section. A large number of MSME enterprises are owned or operated by women, scheduled caste, scheduled tribe, SC/ST, and minority enterprises, provide inclusive employment opportunities and socio-economic upliftment. Supporting data as MSME Annual Report 2024, 51% of MSMEs operated in rural areas. 33% of manufacturing employment arises from MSMEs. Around 23% of MSMEs are women led and women managed. Balanced regional development, decentralization of industrial activity. MSME are geographically dispersed, operating beyond major industrial hubs. The decentralization ensures that economic opportunities are not confined to metropolitan region but extend to tier 2 and tier 3 cities and rural districts. Promotion of local resources and skill. MSMEs utilize locally available raw materials, skills, and crafts. Clusters textile in Tirupur, brassware in Moradabad, as I told you earlier, how the local areas are improving and doing very well for the purpose of export also. Handicraft in Kutch and choir in Kerala exemplify regional specific industry ecosystem, enhance local economic resilience. Reduction of urban migration by generating employment within rural and semi-urban zone. MSME help reduce the pressure on urban infrastructure and mitigate distress migration. Now we'll come to the financial effects. That is access to collateral free credit via CGTMSC. How the benefit of MSME we can take financially. The Credit Guarantee Fund Trust and Micro Small Enterprises CGTMSC is a major financial benefit for MSMEs as it provides access to collateral free credit by offering a guarantee to lenders, which reduces their risk when lending to business that lack pledge assets. The government backed scheme helps MSME, including small manufacturers, service providers, and traders, secure loans for working capital and term finance up to current limit of rupees 10 crore, which may upgraded up to 31st March 2026 for 50 crores, significantly easing their access to funds and supporting their growth. How CGTMSC works. Risk reduction for lenders. When MSME defaults on a loan, the CGTMSC scheme reimburses significant portion of the loss to the lending institution, encouraging banks to lend to a smaller enterprises. Collateral free access. The scheme priority benefits is providing loans without requiring a pledge of assets or third party guarantee, making it easier for new and existing MSMEs to get funding. Guarantee coverage. CGTMSC guarantee a portion of the loan amount, which can be up to 85% depending on the loan and borrower category. Loan amount ceiling. The maximum loan amount eligible for guarantee was increased to rupees 10 crore with effect from 1st April 2025. Benefit for MSMEs. Increased access to credit. By reducing lenders' risk, the scheme increases the availability of formal credit from banks to MSME. Supporters various business needs. It covers credit facilities for both working capital and term loan for equipment financing, foster growth and innovations. With improved access to finance, MSME are better positioned to invest in machinery and technologies which can boost productivity and export capacity. Inclusion of different enterprises. The scheme support a wide range of eligible entities including those involved in manufacturing, trading, service providers, new and existing businesses, women entrepreneurs and SC/ST entrepreneurs. Now come to the legal protection. This is one of the benefits under the MMSME. Legal protection under Section 15 to 18 of the MSME Act for delayed payment. Section 15 to 18 of the MSME Act provides legal protection for micro and small enterprises against delayed payment. Key benefits include mandating payment within a maximum period of 45 days or 15 days if there is no agreement exist, penalizing buyers with mandatory compound interest at 3 times of the bank rate for late payments, and establishing a formal dispute resolution process through conciliation and arbitration facilitation by the Micro and Small Enterprises Facilitation Center, that is MSEFC. In Delhi, it is in Patparganj under the Commissioner of Industries. Protection under Section 15 to 18 of the MSME Act. Section 15, buyer's liability for timely payment. Payment deadline. Buyers must pay for goods and services within the period agreed upon in writing, but this can never exceed 45 days from the date of acceptance or deemed acceptance. Means if the period of the contract is more than 45 days, then it is limited up to 45 days. More than 45 days period will be void. No written agreement. If there is no written agreement, payment is due within 15 days of acceptance or deemed acceptance. If there is no agreement, then payment has to be done within 15 days. Interest penalties. If a buyer fails to make the payment on time, they are liable to pay compound interest at 3 times of the bank rate notified by the Reserve Bank of India. Reserve Bank of India, after every quarter, they are notifying their bank rate. Presently, it is 5.75%. So 3 times of it is around 17.25%. That will be applicable in the case of the delayed payment. Section 18, Dispute Resolution Mechanism. Reference to MSEFC, an MSC supplier can file a reference within a state government's Micro and Small Enterprises Facilitation Council, that is MSEFC, for delayed payments. Conciliation, the MSEFC first attempt to resolve the dispute through conciliation, now governed by the Mediation Act 2023. Arbitration. If conciliation fails, the Council will proceed with a arbitration for settle the dispute. Additional benefit for MSME. Financial stability. The strict payment timeline and interest penalties help ensure a steady cash flow for MSMEs, which is critical for their financial health. Disallowance of deductions. The interest paid by the defaulting buyer on delayed payment is not allowed as deduction for buyer under the Income Tax Act, that is Section 43B, creating a financial distinctive of late payments. Public visibility. A government portal allows MSME to file complaint online, making the payment status and dispute visible to concerned government department and the public. The creates public pressure on defaulting. Social, women and youth empowerment, local enterprises. Empowering women and youth and fostering local enterprises through micro and small, medium enterprises leads to significant social and economic benefits, including poverty reduction, community development, and increased innovation. Benefits of women and youth empowerment. Supporting women and youth people, young people as enterprises within MSME sector yields a strong social return on investment by tackling economic and social inequality simultaneously. For women, financial independence and improved status, MSMEs provides opportunity for women to earn their own income, which increases their confidence and decision making power within their family and communities. Greater economic and social participation. With financial stability, women are empowered to break down social biases and assume more prominent roles within their business and communities. Community welfare. Empowered women often reinvestment reinvest their profits into the community by funding better education and health care for their children. Inspiration for future generation. Successful women entrepreneurs become powerful role model, inspiring other women and girls to pursue their ambitions and challenges traditional gender norms. For new youth, new business avenues, young enterprises or young entrepreneurs bring fresh ideas and are adept at using technology, which leads to innovative startups and opens up new sectors for business growth. Job creation. Youth led ventures, often rooted in skill enhancement and innovation, help curbs unemployment by creating jobs for their peers. Social transformation. By providing mentorship and business opportunities, MSME help young people gain the skill and the confidence to become leaders, fostering a more prospective and innovative society. Benefits of local entrepreneurship. Local entrepreneurship, driven largely by MSMEs, in a uh, matter of robust and inclusive economic development. It directly translates economic activity into the local prosperity and resilience. Yes, any question, please? I can stop in between also. There is no issue.
By chance, are you sharing your screen? Somehow I'm able to see it as blank.
Actually, I have tried my level best to share it, but I am
Sorry, sorry.
unable to do it.
Okay, okay.
Anyway, I'll send to all at the last. Okay. Enhanced local economies. Every rupee spent at local MSME stay within the economy, circulating wealth and boosting regional economic growth. Job creation at grassroots. MSMEs are an engine of employment, providing the jobs for millions, particularly in rural and semi urban areas. They offer opportunities across various skill levels, from artisans and specialized technicians. Balanced regional growth. The widespread geographical presence of MSME, including in less industrialized areas, helps reduce regional imbalances and promote more inclusive growth. Revitalization of traditional skills. Many local MSMEs are founded on traditional crafts, keeping heritage skills alive and ensuring their communication by providing artisans with a reliable livelihood. Community building. Local business often act as hubs for community activity, supporting them strengthen a sense of local pride and create a resilient ecosystem. Greater access to goods and services. Local entrepreneurs identify and fill unmet goods within their communities, leading to more customized and specialized products and services. Government schemes supporting women and youth and local MSMEs. Government have initiated schemes to address the specific challenges faced by women and youth entrepreneurs and to foster local entrepreneurship. Higher subsidies and preferential procurement for women. Schemes like Prime Minister Employment Generation Program PMEGP offers higher subsidies to women entrepreneurs. Additionally, public procurement policies mandated that percentage of government contracts be sourced from the women owned MSMEs. Special training and incubation. Initiatives such as Women Entrepreneurs Platform WEP and SMART provide women with training, mentorship, and access to networks to help them scale their business. Target credit facility. Programs like Mudra Yojana offer microfinancing to small business with a specific focus on women entrepreneurs. Emphasis on skill development, the entrepreneurship skill development program and other vocational programs specifically target unemployed youth and marginalized communities to equip them with skill needed to start their own enterprises. Before coming to the next point, if there is any question, I can take up now. I'll wait for 2 minutes. Is there anybody? There is no questions at all. So I'll start. Government and financial support. CGTMSC credit guarantee for collateral loans up to rupees 10 crore. Introduction. Access to affordable and collateral free finance is one of the most critical enablers for growth and sustainability of micro, small, and medium enterprises. MSMEs. Traditionally, MSMEs have struggled to secure bank credit due to lack of adequate collateral, limited credit history, and high perceived risk. To address this gap, the Government of India and SIDBI established the Credit Guarantee Fund Trust for Micro and Small Enterprises CGTMSC in the year 2000, which has since become a cornerstone of India's MSME financing ecosystem. Establishment and legal framework. The CGTMSC was set up jointly by the Ministry of Micro and Small Enterprises MSME and the Small Industrial Development Bank of India CDB under the authority of the MSME Development Act 2006. It provides collateral free credit guarantee to financial institutions leading to micro and small enterprises. The scheme aligns with Section 9 of the MSMED Act 2006, which empowers the government to formulate program for MSME development and access to institutional finance. Object of the scheme. The main object of the scheme is to facilitate credit flow to the MSME sector without requiring collateral or third party guarantee. Here, whenever you are going for a loan to the bank, they are asking either some security to mortgage, or they are asking some guarantor to come. But in this case, the your mortgage or hypothecation is only limited up to the goods you have purchased through loan. For others, no security is required. Encourage banks and financial institute to lend based on project viability rather than asset backing. Promote enterprises and innovation by reducing financial entry barriers. Key features of CGTMSC. The scheme covers loan up to rupees 10 crore, enhanced limit as of April 2025, and to eligible MSME without collateral or third party guarantee. Guarantee coverage is up to 85% guarantee coverage. For micro enterprises, loan up to rupees 5 lakh, up to 75% for small enterprises, 80% coverage for women entrepreneurs, SC/ST units, and units in the northeastern region. Eligible borrowers, new and existing micro and small enterprises and engaged in manufacturing or services, retail trade, educational institution, and training centers as per revised 2024 guidelines are also eligible, because before that only manufacturing and service industries are incorporated under MSME. But from 2024, even retail trade, educational institutions, and training centers are also included. Eligible lenders, all scheduled commercial banks, regional rural banks, NBFCs approved by the CGTMSC. Guarantee. The guarantee covers runs for the entire loan tenure up to 10 years, ensuring long-term support. Operational mechanism. The lending institution sanctions the loan to the MSME based on its internal credit appraisal. The loan is then covered under the CGTMSC scheme by paying a guarantee fee and annual service fee. There are two type of fee. One is the guarantee fee, other is the annual service fee. Annual service fee was earlier 0.5% of the total guarantee given, which is out of that 50%, 2.5%, 0.25% will be paid by the banks and 0.25% by the borrower. But now it is reduced to 0.37%. The case of default, CGTMSC compensate the lender up to the guarantee percentage, reducing credit risk and promoting lending confidence. Impact on MSME financing. Financial inclusion. CGTMSC has enabled over 70 lakh MSMEs to access formal credit since inception. It bridges the financing gap, especially for first generation entrepreneurs and those lacking collateral. Credit flow growth. As per MSME Annual Report 2024-25, loan worth rupees 4 lakh crore have been sanctioned under CGTMSC, demonstrating its critical role in liquidity infusion into the MSME ecosystem. Promotion of entrepreneurship. By removing the collateral constraints, the scheme encourages innovation and startup creation across India, particularly in Tier 2 and Tier 3 region. Strengthening banking confidence. The partial risk sharing mechanism of CGTMSC incentivize banks and NBFCs to increase MSME lending portfolios without fear of total loss in case of default. Case references in Messrs. Shivam Enterprises versus State Bank of India 2019. The Delhi High Court upheld the principle of CGTMSC, emphasizing that financial institutions must properly extend the benefit of the guarantee coverage to eligible MSME borrowers, reinforcing accountability in credit facilitation. Recent reforms and development between 23 and 25. Increased loan limit raised to rupees 10 crore to include medium enterprises. Fee rationalization. Lower guarantee fee for women, SC, ST, and NER unit. Integration with Udyam registration. Automatically eligible for verification of registration of MSMEs. So here, as you have asked, Mr. Kathuria, your reply comes here that without registration on the Udyam portal, you cannot enjoy the benefits of the MSME. It is must, because from there only you can verify whether this is MSME unit or not.
Okay, sir.
So, digital processing, full online application, sanction, and claim processing via the CGTMSC portal is www.cgtmsc.in. For guarantee, you can log in here, you can apply online. Linkage with TRADS and GSTN data, enhancing transparency and credit risk assessment. Challenges the way forward. Challenges. Now, what are the challenges faced by the MSME? Delays in guarantee claim settlements. Limited awareness among the rural entrepreneurs. Need for more NBFC participation. Way forward. Simplified claims mechanism and faster distribution timeliness, capacity building and awareness campaigns in rural areas, expansion of CGTMSC coverage to working capital loan under digital platform. Conclusion, the CGTMSC scheme stands as a landmark initiative promoting financial inclusive credit accessibility and entrepreneurial growth by providing collateral-free loans. It empowers small enterprises to contribute the GDP, employment and innovation, strengthening CGTMSC through digital integration. Better outreach and green financing incentives will further boost the MSME sector resilience and role in achieving Atmanirbhar Bharat and Sustainable Development Goal, that is SDG 8, digital work and economic growth. So till now, if there is any question, anybody can raise the question. Then only I'll go forward. Since the no question has been raised, so I'll go ahead.
Sir, wanted to just check with you. If we are not time constrained, can we take a break for 10-15 minutes?
Yes, yes, you can ask anything.
If we are not time constrained, that's why I'm checking with you, sir. If you think we can take a break now or maybe after 10-15 minutes or half an hour. Whatever you suggest, sir.
As per convenience of all, because I
I
have
don't
no
know.
problem. I
Okay,
uh, because this is such a lengthy subject. Even I don't think it will cover up to within 3 hours.
okay, sir. Then you
Because
can carry on, sir. No
uh,
need.
because I'm trying my level best to cover it, but
Yes, yes. I know you've done such a lot of comprehensive homework and all, and we would like to see go through your presentation also. What you prepared,
because
definitely.
nowadays there is all emphasis on MSME. So every day new circulars, new regulations are coming, and we have
Correct.
to update ourselves. Then only we can give you the correct information.
Yes, yes, sir. It looks like sir, that way you have prepared so much for the,
Uh,
I mean, webinar.
and
Yes,
it's a very big area.
yes.
We can discuss even for hours.
Okay, sir. So carry
So
on, sir. You can carry
now
on.
we'll go for priority sector lending. What are the RBI guidelines in this regard? Definition: priority sector lending (PSL) refers to the credit flow provided by the banks to specific sectors that are considered vital for the overall economic development of the country. The Reserve Bank of India issues the guidelines to ensure banks allocate a portion of their lending to these sectors. Key features of the PSL, priority sector lending. Targets: banks are mandated to lend to this sector. So first we have to think what are the covered under the priority sector, because priority sector is a very big sector and MSME is only part of it. So under it, what all are coming? Agriculture, MSME, education, housing, export credit, other notified by RBI like renewable energy and social infrastructure. So this is the entire PLI, and banks has to finance minimum 40% of their total finance to these sectors. And out of these sectors, every sector is given some percentage. So that percentage also has to be fixed and completed, because through their statements or their returns, they have to inform to the RBI whether they have uh, completed the formalities or not. If not, then the banks are also penalized for it. So RBI prescribed targets. Domestic commercial banks, excluding RRBs, 40% of adjusted net bank credit or credit equivalent amount of balance sheet exposure, which is higher, should go to PSL. Foreign banks with less than 20 branches, 40% of ANBC or CEA, subject to certain relaxation. Sub-target for PSL. Agriculture is getting 18% of the ANBC. MSME is getting 7.5% of the ANBC. And weaker section are getting 10% of the ANBCs. Others, housing, renewable energy as per RBI guidelines. If you add to all, that will come to 40%. Weaker sections. The category includes small and marginal farmers, micro enterprises, borrowers under the scheduled caste, scheduled tribe categories, and others specified by RBI. Loan certification. Loan given under PSL may be classified as direct finance, loan given directly to farmers, MSMEs, or other target groups. Indirect finance, loan given to intermediaries like cooperatives for on lending to the priority sector. RBI guidelines. Banks should maintain proper records of PSL advance. Bank must ensure quality lending and avoid diversions of funds. Annual targets are reviewed and compliance is monitored by the RBI. So priority sector lending is government is looking after it very strictly. Significance of PSL. Ensure financial inclusion, promotes equitable growth and development, support critical sector of the economy and of affordable credit. Now we'll come to the interest subvention schemes are also given to the MSMEs. There you will get the 2% rebate on the rate of interest if you are covered under the PSL scheme. The 2% interest subvention schemes benefit MSME by providing a rebate on interest for fresh or incremental loan and working capital, which reduces the cost of credit. The scheme implemented through various lenders like scheduled commercial banks encourages productivity and helps with the formalization of the economy by linking eligibility to GST registration. This financial support is the key part of the government's effort to strengthen the MSME sectors. Benefit of the 2% interest subvention scheme reduce the credit cost of credit. The primary benefit is a 2% rebate on interest per annum calculated on outstanding balance of eligible fresh or incremental loans. Means if some industry is already working and they are taking some additional loan under priority sector lending, that benefit will go to the scheme only when you are taking under the PSL, priority sector lending. For others, the same rate of interest will continue. Encourage, encourages productivity. The scheme incentivizes both manufacturing and service enterprises to increase their productivity and grow. However, MSM traders and educational institutions and training centers all are also part of it. But this 2% subvention scheme is given to the manufacturing sector and the service sector to improve their productivity. Supports formalization by making GST registration a condition for eligibility. It encourages MSME to get on the GST platform, which contributes to the formalization of the economy. Because on the basis of the GST only, uh, financial institutions will come to know whether 2% subvention can be given to you under PLI scheme or not. So in addition to the MSME registration, you need to have GST registration also. Provide access to capital. If other financial support by making credit more affordable, which is crucial for growth and stability of the MSME sector. Applicable to various loans. This subvention applies to both working capital and term loans, provided flexibility for different business needs. Eligibility and application. Eligible MSMEs that are registered on the Udyam portal and have a valid GST number are eligible under this scheme. The scheme is applicable to fresh or incremental term loans or working capital loans provided the account has not been declared as NPA. The to cover this scheme, the roadblock is that your account should not be NPA. So additional benefit will not be given to you. Lenders. The loan must be sanctioned for eligible institutions such as Scheduled Commercial Bank, NBFCs, RRBs, UCBs, and DCCBs. How to apply? MSME can apply directly to the lending institution For the scheme is applicable to fresh or incremental term loans or working capital loans, provided the account has not been declared as NPA, as I told you earlier. So MSME can apply directly to the lending institution for the scheme. Lending institutions are all banks. CLCSS, Credit Linked Capital Subsidy Scheme. This was started in 2021 when COVID-19 was there. The credit linked capital subsidy scheme provided benefit to the micro and small enterprises by offering a capital subsidy of 15% of institutional finance used for technology upgradation. Key benefits includes making advanced technology more affordable, reducing the initial loan burden, and improving production quality and quantity. While the CLCS component of the scheme was in operation until March 31st, 2020, it facilitated the technological upgradation of many MSMEs because at that time maximum people were shifted on VCs and other platform to do the online job. So for that, government has given 15% of their total investment as subsidy. How the scheme worked. Subsidy provided an upfront capital subsidy of 15% to eligible MSMEs. Loan amount. The subsidy was based on institutional finance up to rupees 1 crore for the induction of well established and improved technology. Objective to facilitate technology upgradation in MSMEs by making the cost of new plant and machinery more accessible. Benefit for MSMEs. Reduction loan burden. The upfront capital subsidy reduced the initial cost of adopting a new technology. Improved production enabled MSME to adopt advanced production technologies, which led to better quality and quantity of production. Technology adoption provide a direct financial incentives for units to upgrade their equipment and production technologies. Promoted growth support the growth and the expansion of the industry in rural and semi-urban areas by enabling them to become more competitive. Scheme status. The credit linked capital subsidy CLCS component of the scheme was operational up until March 31st, 2020. The funds were released to implementing agencies, banks for settling claims submitted by eligible MSAs before scheme termination. Now I'll come to digital MSME and cluster based development initiative. So if there is any question till now, I can wait for a question. Then I'll start the digital MSME and cluster based development initiatives. So there are no questions, so I'll start. Digital MSME initiative provides financial and technical support to help micro and small enterprises adopt digital tools such as e-commerce and cloud computing to enhance their competitiveness. Cluster-based development initiatives like the Micro and Small Enterprises Cluster Development Program, MSC CDPs, promote the collective growth of enterprises in a specific geographical areas by sharing resources mm, and addressing common challenges. These initiatives work in tandem to create a holistic development approach for MSMEs. Digital MSME initiative is the digital MSME scheme, a component of the MSME Champions Scheme is a government-led initiative to digitally empower MSME by promoting the use of information and communication technologies, that is ICT. Benefits of it: improved market access. Digital tools like e-commerce, online marketing enables MSME to reach a wider customer base, both domestically and internationally. The Ministry of MSMEs also launched a Trade Enablement and Marketing TEAM team scheme to onboard small business onto the open network for the digital commerce, ONDC, open network for digital commerce. Enhanced efficiency. Adopting digital technologies such as cloud computing helps MSMEs streamline operations, automate processes, and reduce IT infrastructure cost. Financial inclusion. Digitalization facilitates easier access to credit by allowing MSME to manage finance online and integrates the digital payment system. Skill development. The initiative support training program on digital skill to improve the workforce, digital literacy, and enhance overall productivity. Cluster-based development initiative. The Micro and Small Enterprises Cluster Development Program is a flagship initiative that addresses common issues faced by MSMEs such as outdated technology, skill gap, and poor infrastructure. By promoting a collective cluster based approach, a cluster is defined as a group of enterprises producing similar products in a contiguous areas like brass utensils in Mumradabad. Key components and interventions. Soft interventions. These focus on building capacity through training programs, skill development, market research, and exposure visits. The government provides grants to cover a portion of the project cost. Hard interventions, common facility centers. The involves creating shared physical assets and cluster members, such as common production centers, design studios, testing labs, or effluent treatment plant. The government offers financial support for a significant portion of the project cost. Infrastructure development. The component funds and the upgrade of physical infrastructure within new or existing industrial estates, including roads, power, water supply, and telecommunication networks. Special Purpose Vehicle SPVs MSC CDP project are managed and executed by an SPV, typically formed for a consortium of local entrepreneurs or their associations. How digital and cluster based initiatives intersect. The integration of digital technology with cluster based development provides MSMEs with a comprehensive strategy for growth. Digital MSME within a cluster. The digital MSME scheme can be a soft intervention within a cluster development program where an entire cluster of enterprises receive support to adoption digital tools collectively. Synergy and efficiency. Cluster development addresses infrastructure, while digital initiatives provide the modern tools to maximize the rise of infrastructure. For example, a common facility center CFC can be equipped with advanced digitally controlled machinery that all enterprises in the cluster can access. Shared knowledge and best practice. Within a cluster, digital platform can facilitate better communication and cooperation among businesses. Enterprises can share digital marketing and strategies, optimize supply chains collectively, and adopt new technologies more quickly. Data driven development by using MSME registration data like Udyam and geographic information, the Ministry of MSME can identify potential clusters and target interventions more effectively. Digital monitoring also helps enhance transparency and track progress. Now we'll come to the challenges faced by MSME. So till now, if there is any question, anybody can ask. Anybody can ask any question till now. Because next is challenges faced by MSME. So now there is no question, I think. Next is challenges faced by MSME. Limited access to formal credit and working capital. Limited access to formal credit and working capital for MSME is a major challenge caused by factors like a lack of collateral, poor credit history, limited formalization, and cumbersome banking procedures. This leads to a significant credit gap, meaning there is a large discrepancy between the credit needed by MSMEs and credit they can actually obtain from formal lenders. Cause of limited access: lack of collateral. Many MSMEs, especially smaller ones, do not have sufficient physical asset to use as collateral for loans. Limited credit history. A substantial number of MSMEs have not developed a formal financial record or credit score, making it difficult for lenders to assess their creditworthiness. Informal nature of operations. The informal and unformalized nature of many MSME operations create information asymmetry, making it hard for the lenders to verify finance and assess risks. Complex banking procedures. Traditional banking procedures are often perceived as complex, involving extensive documentation and long approval times, which can be daunting for MSMEs. Gender specific constraints. Women led MSMEs face unique barriers, including social norms that can limit education, mobility, and the ability to hold collaterals. Lack of experience. Youth led business often face constraint due to lack of experience and credit history. Consequences of limited access. Stalled growth. Without adequate working capital, MSMEs struggle with daily operations, expansion, and technological upgrades, hindering their growth potential. Economic impact. As MSME are crucial for the economy, the persistent credit gap restrict their ability to contribute to GDP and export. Increased reliances on informal resources. Limited access to formal credit can push MSME towards less regulated and often more expensive informal lenders. Government initiative. The government of are introducing schemes and making efforts to simplify banking procedures, provide credit guarantee through the CGTMSE scheme and other financial assistance for expansion. Digitization, technologies like Unified Payment System, UPI, that is Unified Payment Interface, and the India stacks are helping to digitize records and improve access to financial services. In innovative models, the approaches like fintech solutions such as open credit embezzlement network OCEN, open credit embezzlement network, are making it easier for lenders to underwrite small low cost loan to a wider range of MSMEs. Technological obsolescence and low R&D investment. Technical obsolescence and low R&D investment are significant and interconnected issues for micro and small medium enterprises MSME, particularly in developing economies like India. The neglect of innovation hampers productivity, limits growth potentials, and wider and comprehensive gap with larger domestic and global firms. Consequences of technological obsolescence and low R&D, decreased productivity and competitiveness. Using outdated machinery and production process leads to low efficiency and poor product quality. The makes This makes it difficult for MSME to compete with rivals who leverage modern technology for higher output and better standards. Barriers to global market entry. Without continuous innovations, MSMEs lack access to advanced global technologies and struggle to meet the demand, quality, and compliances standards of international markets. Increased operational cost, obsolescence, technology especially in manufacturing, often result in higher energy consumption and increased running expenses, which eats into profit margins. Voluntarily to market shocks, vulnerability to market shocks. Companies that do not invest in R&D and upgrade their technology are less resilient to external disruptions and market fluctuations, such as those caused by the COVID-19 pandemics. Loss of skilled talent, a lack of innovation, and growth opportunities within MSMEs can lead to a brain drain where talented employees margin to larger companies with more modern practice and better projects. Reason for low R&D investment and technology lag. Financial constraints. MSMEs often operates on a tight budgets with limited access to formal credit and high risk perceptions from lenders. The high upfront cost of new technology, including maintenance and training, is often prohibitive, especially when returns are not guaranteed in the short term. Lack of awareness and legacy mindset. Many MSME owners and manage lack of awareness of the benefits of new technology and there is often a deep-seated resistance to change. Many prefers to focus on short-term survival and cost control rather than long-term technological transformation. Skill and knowledge gaps. A shortage of skilled personnel and inadequate digital illiteracy among the workforce prevent MSME from adopting the managing new technologies like AI, IoT, and data analysis. There is often a mismatch between that is taught and in universities and the skill requirements by the industry. Fragmented market and support system. The MSME sector is often fragmented and support system struggle to reach the millions of enterprises, especially those in rural and semi-urban areas. This is compounded by a complex web of regulatory compliances, informal innovations, and high risk perception. Smaller enterprises tend to innovate more informally without a structured R&D framework. This view investing in sky innovative projects with long gestation period as financially unviable. Initiative to promote R&D and technology adoption. Governments and industry bodies are implementing a multi-pronged approach to address these challenges. MSME innovative schemes. The scheme of the Ministry of MSME promotes land and supports untapped creativity in MSME by funding the development of ideas into marketable products. Technology upgradation scheme. The credit linked capital subsidy and technology upgradation scheme provide a capital subsidy for replacing old machinery. Financial incentives. The government has created funds to encourage private sector R&D and offer tax initiatives for R&D expenditures. Innovative and incubation center. Initiative like the Atal Innovation Mission and Nidhi Inclusive Technology Business Incubator ITBI program support entrepreneurs by providing infrastructure and lab facility to convert ideas into products. Training and skill development program like entrepreneurship and skill development program ESDP and the management development program MDP aims to build managerial and technical capacity. Digitalization support. Solutions like cloud computing, AI, and e-commerce platform are becoming more affordable for MSMEs. Collaboration between the government and private tech companies helps create tailored, cost-effective solutions. Cluster-based approach. Programs like Micro and Small Enterprises Cluster Development Program, MSE CDP foster innovation by providing common facilities and research hubs. So now we'll go to the regulatory framework. If there is any question till now, you are welcome so I can reply. Any question, please, till now, whatever I told, if there is any confusion on any point, you can ask the question. So there is no questions. I'll move forward. Uh, Regulatory burden and compliance complexity. MSME face significant regulatory burden due to the sheer volume of compliance requirements, high cost, and complexity of the laws. According to Proteum and Global Payroll Association GPA. This burden includes the cost of time, manpower, and professional fees, which, which can be tens of lakhs of rupees annually, as well as penalties for minor errors, with one report noting as many as 1,400 plus regulations for a single manufacturing MSME. This complexity, driven by a high frequency of regulatory updates, discourages formalization and hinders growth, as noted by analysis from the IPA. And this BW article, key aspect of the burden, volume of regulations. A single manufacturing MSME can be subject to over 1,400 plus compliances requirement across different laws, notes Proteum, and thus it is difficult to manage such compliances in addition to their own manufacturing work. High costs. Annual direct and indirect cost of compliances can range from rupees 13 lakh to over 20 lakh, including professional fees, audit, software, lost managerial time, says Global Payroll Association, GPA, SME communities, and the Economic Times. Frequency of changes. The regulatory landscape is constantly evolving, with an average of 40 legal updates per day, requiring the constant monitoring. According to Proteum, and this team leads complexity and risk. Compliance obligations are intricate and can include a large number of register and clauses, with labor laws alone contributing significantly to imprisonment clause, as discussed by Global Payroll Association (GPA). Distinctive to formalization, the high efforts and cost associated with compliance and can discourage MSMEs from formalizing their operations, notes Proteum potential solution. Simplification, streamline regulations to make them easier to understand and follow. Guidelines and support, providing clear guidelines and support to help MSMEs navigate the requirement. Now we'll come to the delayed payments from large corporate is also one of the reason. Delayed payments from the large corporate to MSME are addressed by the MSMED Act 2006, which mandates a 45-day payment period. If this rule is burden, buyers are liable for interest at 3 times of the RBI bank rate, and the MSME can file complaint on the MSME Samadhan portal to get a formal notice from the Micro and Small Enterprises Facilitation Council (MSEFC). Companies must also submit half-yearly return detailing delayed payments to the Ministry of Corporate Affairs. Legal framework and enforcement. 45 days payment rule. Payment for goods or services from an MSME must be made within 45 days of acceptance or deemed acceptance. Interest on late payments. If the buyer fails to pay on time, they are liable to pay interest at a rate of 3 times of the RBI bank rate. For example, if the RBI rate is 5.75% as on today, the interest rate would be 17.25% to be paid to the MSME for a delayed payment. Complaint mechanism. MSME can file a complaint on MSME Samadhan portal to initiate proceeding. MSME Facilitation Council. The MSEFC issues a formal notice to the corporate buyer, and if the delay is found unjustified, it can order payment of dues. Government monitoring. Under a separate regulation, all the companies that have delayed payment to MSMEs beyond 45 days are required to submit a half yearly return to the Ministry of Corporate Affairs detailing the outstanding amount and the reason for delayed payments. Power imbalances. Larger corporates may have stronger bargaining power and use it to their advantage. Cash flow management. Sometimes delay is due to the corporate client's own cash flow issues or internal approval process. Informal agreements. A lack of written contract or agreements can make it difficult for MSME to enforce timely payment. Disputes. Delay can be caused by disputes over quality or delivery. How MSME can take action. Check for a written agreement. Have a written purchase agreement, work order, or other documents to prove the claim. Register on the Udyam portal. The MSME must have a Udyam registration to be eligible to file a complaint. That is the most important part. File a complaint online. Go to MSME Samadhan portal to file a delayed payment application. Respond to the council. After filing, you may need to respond to the MSCFC and provide your evidence of the delayed payment. Market competitions, lack of export readiness, market competition and lack of export readiness are significant hurdle for micro, small and medium enterprises, MSMEs, limiting the growth in both domestic and international markets. The challenges are incorporated and weakness in one area, compounding issues in another. Challenges with market competitions. Competition from a larger firm. MSME face intense competition from a larger domestic corporation and multinational companies that benefits from greater economies of scale. These larger players can offer lower price, wide distribution network, and more substantial uh, marketing budgets. Limited market access. Many MSMEs rely on local distributors or word of mouth marketing, struggling to penetrate larger domestic and global supply chains demonstrated by the larger corporation. Their market reaches is often confined to local areas, limiting their growth potential. Technology obsolescence. Many MSMEs were outdated technology and lack of their financial resources and know how to adopt modern solutions. These results in lower productivity and production delays. The disadvantage put to them at a competitive disadvantage against larger, better resourced competitor. Factors contributing to lack of export readiness, lack of awareness and market research. A primary barrier is the lack of awareness and international demand and opportunities, coupled with the insufficient or inadequate market research to analyze foreign markets. Inadequate credit and finance. Securing timely and affordable credit remains a major obstacle for MSMEs, especially for financing exports. Banks often requires a high collateral and charges higher interest rates due to the perceived lack of risk of smaller firms. Non compliances with global standards. Many MSMEs lack awareness of and capacity to meet stringent international quality, safety, and packaging standards required for foreign markets, such as CE market or FDA compliances. The certification process can be time consuming and expensive. Complex procedure and logistics, navigating complex export documentation, custom clearance procedure, and foreign exchange regulations can be overwhelming and costly for MSMEs. Inadequate logistic manufacturers and high freight cost further add to these challenges. Limited human resources, shortage of skilled labor, and a lack of specific managerial experience for international business practice hinders MSME from entering and succeeding in foreign markets. Supply chains vulnerabilities. MSMEs face difficult integrating into global value chains due to poor supply chains infrastructure and the high fixed cost associated with entering international markets. Initiative to boost MSME competitiveness and export readiness governance have introduced multiple schemes and programs to address these challenges. Financial supports scheme like the credit linked capital subsidy scheme help MSMEs upgrade technology. Other programs promote access to export credit and infrastructure to mitigate risk. Incentive for exporters. The remission of duties and taxes on exported products RODTEP and rebate on state and central levies and taxes ROSCTL schemes provide refund and embedded duties and taxes, development of infrastructure and market linkage, export facilitation center, EFCs. These centers provides monitoring and support of MSMEs for exporting. International cooperation scheme. The initiative facilitation MSME participation in the international exhibition, trade fairs, and buyer sellers meet. Dispute as district as export hubs. The program identifies products with export potentials in cash districts and provides support to local manufacturing and exports. Capacity building and digitization. MSME Champion Scheme. The initiative helps MSMEs become globally competitive through schemes for quality certificate, that is ZDED, zero effect, zero defect, efficiency, lean, LEAN, and innovation, inclusive design and IPR. B2B portables. The government has introduced digital platform like MSME Mart to provide next generation service and connect MSME to wider markets. Legal and policy framework. Till now, there is anything anybody can ask? Because next we are going to legal policy framework. If anybody is having any question till now, You are welcome to ask.
Sir, I have no question as such, but I have one observation. Though there are so much benefits and all are given, incentives are given to a MSME, but at the same time there are too much controls on them. And what I have got the feedback from the market, they are not able to utilize those full benefits like incentives, what you are saying and all.
You are
But
absolutely right. You are absolutely right. Because when there are more than 1,400 compliances per annum
exactly.
and more than 40 regulations per day, then how MSME can survive? So
I
we
am told there are so many watchdogs over them. Either they have
yes,
to focus on their business or they should work only on availing those fiscal incentives from the
yes,
government or something.
you are absolutely right. That's why they have made GABA committee, which
Okay.
gives its report, which will be implemented in parts from 31st October 2025 to
Right.
31st March 2026. I hope that will give some relief to the MSME sector.
Exactly, sir. Yes.
So I'll move forward. Legal policy frameworks.
Yes, sir.
MSME Development Act 2006, key provisions, section 15 to 18. Legal protection for MSME under section 15 to 18 of the MSME Act, delayed payments. Micro, small, and medium enterprises play a vital role in the Indian economy. However, delayed payments from buyers, often larger enterprises or government agencies, have historically been a major challenge affecting liquidity and growth. To protect MSME, the MSME Development Act 2006 provides specific legal remedies under Section 15 to 18. Section 15, obligations of buyer to make timely payment. Provision: any buyer of goods or services from an MSME is legally required to make payment within 45 days from the date of acceptance or deemed acceptance of goods and services. Implications: the ensure that MSMEs are not forced to wait indefinitely for payment, maintaining cash flow and operational stability. Penalty for default: if the buyer fails to make the timely payment, they are liable to pay compound interest with monthly rest, means monthly compoundable, at three times of the bank rate notified by the RBI on the overdue amount. Liability to buyer to make payment: where any supplier, any goods or renders any service to any buyer, the buyer shall make payment therefore on or before the date agreed upon between him and the supplier in writing, or where there is no agreement in this behalf before the appointed day, provide that in no case the period agreed upon between the supplier and the buyer in writing shall exceed 45 days. Means if there is any agreement, suppose for 56 days or for something more, so it will be reduced to 45 days automatically. Because this is a statutory requirement. So the agreement of the payment after 45 days to 56 days will be void. It will be not enforceable before any law, provided that in no case period agreed upon between the suppliers and the buyers in writing shall exceed 45 days from the day of acceptance or the day of deemed acceptance, date from which the rate of interest is payable, that is under section 16. Where any buyer fails to make the payment of the amount to the supplier as required under section 15, the buyer shall, notwithstanding anything contained in any agreement between the buyer and the supplier or in any law for the time being in force, be liable to pay compound interest with monthly rest to the supplier on that amount from the appointed day, or in the case may be from the date of immediately following the date agreed upon at 3 times of the bank rate notified by the Reserve Bank. Here, suppose your agreement is less than 45 days. Suppose the agreement is only for 40 days. So the rate of interest will start from the 41st day. Their 45 days will not work. Section 17, recovery of the amount dues for any goods supplied or services rendered by the supplier. The buyer shall be liable to pay amount with interest thereon as provided under section 16. Reference to Micro and Small Enterprises Facilitation Council. Notwithstanding, that is under section 18, notwithstanding anything contained in any other law for the time being in force, any party to a dispute may, with regard to any amount under due under section 17, makes a reference to the Micro and Small Enterprises Facilitation Council. On receipt of a reference under subsection 1, the council shall either itself conduct a conciliation in the matter or seek an assistance of any institution or center providing alternate dispute resolution services by making it reference to such an institution or center for conducting conciliation and the provision of section 3H 48, 55, 56, and 61 of the Mediation Act 2023. Or earlier it was between section 61 to 85 of the Arbitration Act. So this is the latest development. Where the conciliation initiated is not successful and stands terminated without any settlement between the parties, the council shall either itself take up the dispute for arbitration or refer to any institution or center providing alternate dispute resolution services for such arbitration and provisions of the Arbitration and Conciliation Act 1996 shall then apply to dispute as if the arbitration was in pursuance of an arbitration agreement referred to in subsection 1 of section 7 of that act. Subsection 4. Notwithstanding anything contained in any other law for the time being in force, the Micro and Small Enterprises Facilitation Council or the center providing alternate dispute resolution services shall have jurisdiction to act as an arbitrator or conciliator under this section in a dispute between the supplier located within its jurisdiction and a buyer located anywhere in India. The beauty of this act is the jurisdiction will be the area of the supplier. Buyer may be from anywhere in India, but where supplier exists, the jurisdiction will be that area only. Every reference made under this section shall be decided within a period of 90 days from the date of making such a reference. So upper limit of the resolution is also given as 90 days. MSCFC Facilitation Council for Payment of Disputes. Section 16 refers to Micro and Small Enterprises Facilitation Council. Provision: if a buyer defaults, the MSME can approach the MSEFC established under the Act. Role of MSEFC: act as a quasi-judicial body to facilitate speedy settlement, can direct the buyer to make immediate payment along with interest, provided a less formal and faster dispute resolution mechanism compared to civil courts. Civil courts will take time, but in MSCFC, once you have submitted your application, It has to be disposed of up to maximum 90 days. That limit is given by the law. Benefits: MSME avoid long litigation, can recover dues effectively, efficiently. Section 17, powers of MSEFC. The council can hear the complaint of the MSME, examine the document, contracts, and evidence supply or delivery. Pass an order mandated payment of principal plus interest. Enforceability. Order issued by the MSEFC are binding and non-compliance can be pursued in the higher courts. Appeal mechanism. Provision. If either party is dissatisfied with the MSEFC order, they may appeal to a civil court within 30 days of the order. Significance: provide a statutory appellate remedy while still emphasizing speedy resolution. Timely payment assurance: MSMEs are legally protected against delayed payments. Interest on delays: buyers must pay higher interest, that is 3 times of the RBI rate, deterring defaults. Quicker dispute resolution: MSCEFC Act as a dedicated forum to resolve MSME payment disputes. Legal recourse: MSME can escalate to courts if unsatisfied with the MSEFC order. Strengthens cash flow. Protection ensures MSME can continue operate without severe liquidity constraints. Judicial interpretation. Order enforcement. Courts have upheld the enforceability of the MSEFC orders and emphasized that the interest for delayed payment is mandatory, not optional, because mainly disputes are on the interest because interest rate is very high. But court, in different orders of the court, it makes it clear that it is a mandatory provision, it is not optional provision. Landmark cases. Various High Court and NCLAT have reiterated that buyers cannot escape liability by citing business constraints. Section 15 and 218 are strictly protective to MSMEs. Conclusion: Section 15 and 18 of the MSME Act creates a robust legal framework to ensure that MSMEs receive timely payments. This framework not only safeguard the financial health of MSMEs but also strengthen their bargaining power in commercial transactions. So till now, anything else? Any question, any confusion, any clarity, anybody can ask. So shall I continue further? CGTMSC Trust Legal Framework and Purposes. The Credit Guarantee Trust Fund or Micro Small Enterprises is a trust that administers the Credit Guarantee Scheme CGS, providing collateral-free loans to micro and small enterprises in India. Legal framework: the CGTMSC are jointly established in 2000 by the Ministry of Micro and Small and Medium Enterprises and the Small Industry Development Bank of India, SIDBI. The legal framework includes following key aspects: MSMAD Act 2006. The CGTMSC scheme operates under guidelines set by the Micro and Small Medium Enterprises Development Act 2006, which provides special protection and support to MSMEs. Trust deeds. The establishment of the CGTMSC is a trust is defined by a formal trust deed, making a distinct legal entity to manage the Credit Guarantee Fund. Member lending institutions. MLIs. The scheme operates through an agreement between the CGTMSC and various financial institutions such as scheduled commercial banks, regional rural banks, and select non banking financial companies, NBFCs. These MLIs are responsible for evaluating credit application and disbursing loans. Operational guidelines issues detailed operational guidelines and scheme documents that define the rules for eligibility, guarantee coverage, and the claim settlement. These documents are updated periodically to align with the economic needs. Risk management and compliances. The CGTMSC and the MLIs follow strict anti money laundering AML and the counter terrorism financing CTF policies to prevent misuse of funds. These also have a risk management framework to assess and monitor risk associated with lending to MSEs. Purpose of MSEs. The primary purpose of CGTMSC is to strengthen the credit delivery system and facilitate the flow of institutional credit to the MSME sector. The trust serves several key functions: provide collateral free loans. The most significant purpose is to enable entrepreneurs to access credit facility without the need for financing policies to prevent misuse of funds. They are all risk management framework and monitor risk associated with it. Yes, encourages leading to MSMEs by providing a credit guarantee to MLIs. MLIs means member lending institutions. They are all banks, NBFCs, etc. CGTMSC reduce the risk perception for lenders. In the event of a default, the trust makes good a significant portion of the loss incurred by the lenders, which encourage them to lend more freely to the MSME sector. Foster entrepreneurship. The scheme support first generation entrepreneurs with viable business ideas but access to equitable uh, limited access to capital. This helps convert job seekers into job providers and contribute to the nation building. Support specific enterprises categories. CGTMSC offers enhanced benefits and higher guarantee coverage for certain groups to promote inclusive growth. This includes women and transgender entrepreneurs, entrepreneurs from special category states and operational districts, micro micro enterprises aids business expansion and viability. The funding hybrid security options. For larger credit facilities, CGTMSC allows MLIs to accept collateral for a part of the loan while remaining incurred portion is covered by the trust. This provides flexibility of growing MSMEs. So RBI and SIDB role in MSME financing. Now I'll come to that. If there is any question, anything you want, any clarification till now, I am ready to clear all the issues. So I am moving to the next topic, that is RBI and SIDB role in MSME financing, how they will refinance the MMLIs. Introduction. Micro and small medium enterprises are vital for India's economy and development. They contribute significantly to GDP, export, and employment, access to timely and adequate finance remains a crucial factor in their growth. The Reserve Bank of India and Small Industrial Development Bank of India plays vital role in developing and strengthening the MSME financing ecosystem in India. The role of RBI in MSME financing. The Reserve Bank of India, as the central bank, is a is responsible for regulating, supervising, and promoting credit flow to MSME through policy measures, priority sector lending norms, and financial inclusion initiatives. Policy framework and regulation. The RBI defines the periodically revise the definition of MSMEs in the line with the MSME Development Act 2006 to ensure uniformity across the financial institution. It provides policy guidelines to commercial banks, cooperative banks, and NBFCs for lending to the MSME sector. Priority sector lending (PSL) under RBI priority sector lending guidelines. The banks are mandated to allocate 7.5% of adjusted net bank credit to MSME sector. That is out of 40% of the total. Within this, sub-targets are fixed for micro enterprises, ensuring inclusive credit flow to the smallest unit. Credit flow monitoring and refinance scheme. RBI monitors the flow of institutional credit to MSMEs through periodical returns from the banks. It also encourages the use of Credit Guarantee Fund Trust for micro and small enterprises to facilitate collateral-free loans. Rehabilitation of stressed MSME account. RBI issued a framework for revised and rehabilitation of stressed MSME 2016, allowing banks to identify, restructure, and rehabilitate potentially viable MSME unit at an early age. It means wherever the MSME is about to go to become NPAs, the banks were given power to rehabilitate and revive those stressed MSMEs by providing the loans. This is the new concept the banks have adopted on the instructions of the RBI. They replaced earlier guidelines under BIFR system and simplified procedure for smaller borrowers. Interest subvention and credit support. RBI supports interest subvention schemes such as the 2% interest subvention for MSMEs implemented through banks to lower the cost of credit. It also promotes trade receivable discounting system platform for financing MSME receivable from corporate buyers, improving liquidity. Financial inclusion and digital initiatives encourages adoption of digital lending PSB loans in 59 minutes and Udyam registration integration for faster loan approval. This system was adopted for uh, online uh, application of the loan. Financial inclusion and digital initiatives and encourage the adoption digital lending PSB loans in 59 minutes and Udyam registration integration for faster loan approvals. Mandates banks to have MSME specialized branches to cater the sector specific needs. Role of SIDBI in MSME financing. The Small Industrial Development Bank of India, established under the SIDBI Act 1989, is the principal financial institution for the promotion, financing, and development of the MSME sector in India. refinancing and direct lending. Refinancing assistance, SIDBI provides refinance to banks, NBFCs, and state financial corporations for onwards lending to MSMEs. Direct finance, often term loans, working capital, assistance, and venture, including directly to MSME, engage in manufacturing, services, and exports. Credit guarantee and risk management. SIDBI, along with Government of India, established the CGTMSC Credit Guarantee Fund Transfer and Micro Small Entrepreneurs in 2000, enabling collateral-free credit up to rupees 2 crore for MSME initially, and then increased to rupees 5 crore in 2023 and rupees 10 crore in 2025. It also supports the risk sharing facilities with the banks to encourage MSME lending. Promotional and developmental role. SIDBI undertakes various capacity building and cluster development programs to enhance MSME competitiveness. It promotes entrepreneurship, development, green and sustainable financing, and skill training initiatives. Specialized funds and schemes. SMILE, SIDBI makes in India loan for enterprises. Provided soft loan for new and existing MSMEs. Funds for startups, FFS, managed by SIDBI for promoting startups ecosystem under the Startup India initiative. SIDBI Startups Mitra, online platform connecting startups with investors, incubators, and mentors. Prayas scheme provides microfinance through partners institutions to micro enterprises. Digital and fintech integration. SIDBI supports digital credit delivery platforms and MSME digital loan portals to enhance the financial accessibility. It also partners with a fintech for data driven credit assessment, sustainable and green functioning. SIDBI is a pioneer in energy efficiency and cleaner production financing, supported by multilateral agencies like JICA, KFW, and ADB. Implement programs such as end-to-end energy efficiency 4E to reduce carbon footprints of MSMEs. Coordination between RBI and SIDBI. RBI and SIDBI work jointly on policy formulation, data collection, and credit guarantee mechanism. SIDBI act as a nodal agency for implementing RBI supported system like interest subvention and TREDS awareness program. Both institutions collaborate with the Ministry of MSME and Financial Stability Development Council FSDC to address sectoral challenges. Conclusion. The RBI and SIDBI together form the backbone of India MSME financing architecture, while RBI ensure a conclusive regulatory and credit policy framework. SIDBI operationalize these policies through direct refinancing and development initiative. Their contribute their combined efforts contributes to a robust, inclusive, and sustainable MSME ecosystem, supporting innovative employment and balanced regional growth. Samadhan portal for delayed payment. Anything up to this? Any question, any query, any confusion, any clarification by anybody? Simply by activating your audio and video. So there are no questions. I'll start again because I have to complete before one, and the material is so much. Samadhan portal for delayed payment redressal. But again, at any point, anybody can stop me and ask the questions. I feel good because I told this is an interaction program. If you ask me, then it will not only encourage you, but it also encourage me to give more knowledge whatever I have. Samadhan portal for delayed payment redressal. The Samadhan portal is an online system launched by India's Ministry of MSME for micro and small enterprises to address delayed payment from the buyers. It allows MSME to file complaints against buyers, which are then reviewed by the Micro and Small Enterprises Facilitation Council, MSCFC. The portal makes case public to create pressure on defaulters and allow the MSME to track their case status online. How it works: file a complaint. MSME can file online complaint against buyer who have made delayed payments. Case proceedings. The Micro and Small Enterprises Facilitation Council handles the case filed through the portal. Public visibility. Once the once filed, the complaint becomes public, creating moral pressure on the buyer and ensuring the issue is visible to relevant and authorities like central ministries, departments, and state governments. Case tracking. MSME can use the portal to track the status of their cases throughout the resolution process. Key features: empowers MSMEs, provides a direct and official channel for micro and small enterprises to seek redressal for a delayed payment. Ensure timely payment, helps in timely payment to MSMEs, within turns improves their cash flow and financial stability. Promotes accountability. Public visibility of complaint prompts faster and action from defaulting parties. Online access. The entire process from filing to tracking can be managed online, making it more efficient and accessible. Judicial proceedings and case laws related to MSME. Silpi Industries versus Kerala State Road Transport Corporation 2021, arbitration versus MSEFC. Silpi Industries versus Kerala State Road Transport Corporation and another 2021 9 SCC 727 bench. Supreme Court of India, Justice Hemant Gupta and V. Subramanian. Background: Silpi industry and MSME supplied goods to the Kerala State Road Transport Corporation KSRTC. When KSRTC failed to make the payment, Silpi industry approached the Micro and Small Enterprises Facilitation Council MSCFC under Section 18 of the MSME Development Act seeking recovery. KSRTC objected, arguing that an arbitration clause existed in the contract and that matters should go to the arbitration under the Arbitration and Conciliation Act 1996. The dispute was whether the MSME could still approach the MSEFC despite the presence of an arbitration clause in the contract. Key legal issue is whether the supplier registered as an MSME can invoke the jurisdiction of the MSEFC under Section 18 of the MSME Act 2006 when the contract contains an arbitration clause or whether the arbitration clause override the MSEFC authority. Relevant legal provision. MSMED Act 2006, Section 18 provides for reference to the MSC Facilitation Council for delayed payments. Section 24 gives override effects to MSME Act over any other inconsistent law. Arbitration and Conciliation Act 1996. Parties can resolve dispute by arbitration as per contract. Arguments. Appeal and Shilpi industry. The MSME Act is a special legislation aimed at protecting small enterprises. Section 24 gives it an overriding effect over other laws, including the Arbitration Act. Therefore, the existence of an arbitration clause cannot bar the MSCFC jurisdiction. Respondent. Once parties have agreed to arbitration, disputes must be resolved through that mechanism. The MSME Council intervention would nullify the contractual arbitration clause. The Supreme Court held overriding effect of MSME Act. This is a judgment. The MSME Act 2006, being a special beneficial legislation, overrides the Arbitration and Conciliation Act 1996 by virtue of Section 24 of MSMED Act. Therefore, even if an arbitration clause exists, an MSME supplier can approach the MSEFC under Section 18. This is very clear by the Supreme Court. Arbitration through MSEFC. Once a reference is made to the MSEFC, the Council can conduct conciliation and, if unsuccessful, refer the matter to arbitration, even if the contract had a separate arbitration clause. Mandatory registration. However, the supplier must be registered as an MSME on the date of supply to claim the benefits under this act. Key takeaways issues. Can MSME bypass contractual arbitration? Yes. MSME Act prevailed due to Section 24 clauses. Is MSME arbitration valid? Yes, it is a statutory arbitration under the MSME Act. Registration requirement. Supplier must be registered before supply of goods and services. Effect of award. MSEFC award is enforceable as a decree of court under Section 19. Next case is SAIL versus, that is Steel Authority of India Limited versus Micro and Small Enterprises Facilitation Council 2021, jurisdiction upheld. Court, Supreme Court of India. Legal context. The case concerns the jurisdiction of the MSEFC under Section 18 and 19 of the Micro and Small Medium Enterprises Development Act 2006. The issue often arises when a large buyer, such as SAIL, disputes the council authority by citing a pre-existing arbitration clause in the contract. Facts of the case. The supplier registered as an MSME supplied goods and services to SAIL. Payment was delayed and the supplier filed a claim before the MSEFC under Section 18 of the MSMED Act for recovery along with interest. Issue before the court whether existing of an arbitration clause between the parties ousts the jurisdiction of MSEFC under the MSMED Act 2006, whether proceedings initiated under Section 18 of the MSMED Act are valid despite a separate arbitration clause. Hailed decision. The Supreme Court upheld the jurisdiction of MSEFC ruling that the provision of MSMED Act prevails over the Arbitration and Conciliation Act 1996, as it is a special legislation intended to protect micro and small enterprises. Once a dispute is referred to MSEFC under Section 18, the Council can either conduct conciliation itself or refer the matter to arbitration under Section 18, subsection 3. The arbitration clause in the contract cannot override the statutory mechanism provided under the MSMED Act. Key legal principle. The MSMED Act, being a special statute enact for the benefit of micro and small enterprises, shall have an overriding effect over the Arbitration and Conciliation Act 1996. Important section referred to Section 18(1), subsection 1 to subsection 3, MSMED Act dispute resolution through facilitation council, conciliation and arbitration. Section 25 MSMED Act overrides effect of the Act. Section 7 Arbitration and Conciliation Act 1996 Arbitration Agreement. Significance of the judgment confirms that MSEFC jurisdiction cannot be ousted by a private arbitration agreements. Strengthens the legal position of MSMEs in recovering delayed payments. Reinforce that the MSMED Act has a beneficial and overriding in nature. Connected case references Silpi Industries versus Kerala, a state road transport registration must exist at the time of contract of arbitration clause does not bar MSM EFC jurisdiction. Principal Chief Engineer of Manabhai and Brothers 2019, MSCFC can act as an arbitrator even if there is a private arbitration clause. Conclusion. The Supreme Court in Sale versus MSM EFC 2021 reaffirmed that Facilitation Council retains jurisdiction to adjudicate dispute involving MSMEs for delayed payments even when the contract contains independent arbitration clause. The ruling ensures the primary of MSMED Act provisions in safeguarding MSME interests. And another case is also there, modern industry versus sale, enforcing displayed payment provisions. Modern industry versus Steel Authority of India, SCC 44, Court, Supreme Court of India. Background. This case relates to delayed payments to small scale and ancillary in industrial undertaking 1993. This case is related to 1993, which was uh, override by the MSMED Act 2006. So I don't think there is any cases pending which covers under the Act of 1993. If there is any and we have the time, then we can cover it. Yes, any question from anybody? Now please put on your audio and video all so we can discuss now
Mine
instead
is
of
on.
giving the lecture. May I request? The video. Yes, sir. If you have any questions, you can ask. Otherwise, I can
No, I
I can
don't
repeat
have
something.
any question.
What is the Guava
Sir,
report?
I have one question.
Sir, I have one more observation.
Huh.
Generally, in case of MSME, there are two things. One, if their suppliers are big enough, they don't want to go against it, whether the payment, even if delayed more than 70 days, whatever it is. Because they know if they go against their legal action with the supplier, they are going to lose their business or something like that. So the MSME doesn't goes to these forums for speeding up their payments. And secondly, there are many companies where, though there is a corporate complaint that any suppliers or any purchase made from MSC has to be reported in the balance sheet, but most of the audit report, annual report, if you see, they say we don't have MSME data. That is what.
But practically you are right, but legally just situation is this: if any big company is not making payment or making the payment in delay, they have to reflect in schedule 3 of their annexure 3 of their balance sheet, and
Correct.
which is going to the Ministry of Corporate Affairs. Number one. Number
Yes.
two, any benefit on the delayed payment will not be allow any tax benefits under section 43B of the Income Tax Act. That is additional penalty on him for not making the payment in time. And
So
here you are right, the people are not
So
going.
that is the reason that Schedule 3, if you see annual reports of most of the companies, they mention there's no data available or something. Even at the time of vendor boarding, they have every data, everything is there with them. But still, when if you see the annual reports, they say don't have data. Simply one line statement or something. Disclaimer is there in their annual reports.
But if
Yeah.
somebody contradicts it, then
Huh,
they'll be soup
yeah,
by
that's what
giving
I'm
a
saying, sir.
by
Smaller
giving a wrong
MSME,
information.
yeah, that's what I'm saying. The smaller MSME would not like to contribute. They may not go against their bigger customers whom they're supplying in bulk quantities.
No, but in some cases they can go like public sector undertakings and your um, government, because Ministry of Small MSME has already instructed all the government departments that they
Hmm,
have to make the purchases from MSME at least 25% of their requirements.
right. Oh,
So that gives a boost to the MSME.
MSME sector.
So they have a ready market in their hands.
Good for MSME.
Uh, so any other question anybody can ask?
I wanted to ask
Sir, I have
a
one
particular
question.
thing.
Please ask. I'll be happy.
Uh,
Sir,
there are
one
some
of the
trading MSMEs.
Please,
Can
one
I
by one.
continue? Can I continue?
Introduce yourself and ask the
I'm
question.
Sanjay Khandelwal. I'm an IP. There are some trading MSMEs which take a registration specifically for the purpose, I believe, of priority sector lending. Now, when I, as a company, deal with such trading MSMEs, do I have to disclose in my balance sheet the details relating to such MSMEs, that payments due to such MSMEs as well?
Only you have to disclose when there is a question of the delayed payment. If there is no question of the delayed payment, then you need not to
No, but
disclose anything.
this delayed payment restriction is not applicable in the case of trading MSMEs.
Now it is applicable after 2024.
Is it?
Yes. Before 2024, it was not there, but now it is there.
Okay, so even a trading MSME is entitled to the delayed payment interest of.
Yes, absolutely right. From 1st April 2024.
I see. Okay. Is there a relevant circular that I could refer to in this regard?
Yes, you go on the site of the Ministry of MSME. You will find everything there.
Okay, fine. Thanks a lot.
For making a separate ministry means the importance government is giving to this sector.
Okay, thank you.
Yes, on anything else. Somebody else is
yes,
also
sir.
speaking.
Yeah, my name is Vishram Panchpur. I'm a practicing company secretary and IP.
Yes,
The
please.
question is, one of the MSME entities, their reference was rejected by MSME Council on the ground that purchase orders were not signed. All purchase orders were through email. So in such case, can a fresh complaint be filed using section 65B of the Information Technology Act affidavit?
Yes, it can be. It can be. The only thing is you have to submit an affidavit under section 65B of the
Information
Act.
technology.
Correct.
Because they have all other details like proof of dispatch, delivery of goods. So all those documentary evidence is available, but still the complaint was rejected on the ground that purchase orders are not signed. So all correspondence was through email. So there was no manually signed purchase orders. So in such case, can this affidavit be submitted under section 65B of Information Technology Act?
It once you receive the order, then you are having the option for an appeal. You cannot refile the application as a fresh because you have some order in your hand. So the only option is
Okay.
with you. You can go for an appeal and submit your additional document there.
Okay.
And this is one of the reason for filing an appeal, that following document were not submitted to the council. That's all.
Okay. Okay. Okay, sir. Thank you.
You are welcome. Anything else? Anybody else? Or we can say good day, because as far as material is concerned, I am having lot of material till now also, because the subject is so big.
Yes. Sir, thank you for your presentation. Actually, sir, I appreciate your energy for continuous 3 hours without taking any break. You continued with your presentation, and there was very less interaction, so you have to speak more and more.
Actually,
So really,
I am always preparing with the interaction, because I feel when you interact with your listeners, you feel more energetic, because you will have something to apply your mind and say something.
yeah. Oh, sir, kudos to you. It's appreciable. You continued for more than 3 hours.
Thank you so much. Still, if there is anybody else can uh, put any question, he is very much appreciated. Or we call it a day if there is no questions.
Yes, sir. We can conclude the meeting now.
Okay, thank you so much to all of
Thank you
you
very much. Thank you very much.
for your great patience
Thank you,
and
sir.
hearing me.
Thank you, sir. Thank you
Thank
very
you,
much.
sir. Thank you, sir.
Is there? Yes, sir. You want to say something? So shall I leave the meeting now?
Yes, sir. Yes, sir.
Yes, sir. Thank you very much, sir, for such a nice and knowledgeable session. Sir, please share the presentation with me. I will share with the participants.
Okay, I'll do that. I'll do that. Okay. Thank you very much.
Thank
Thank you to all. Okay.
Thank you, sir. Thank you very much.